American Michael Burry was born in San Jose, California on June 19, 1971. He's a physician, hedge fund manager, and investor from the United States. He attended UCLA for his pre-medical studies in economics and medicine and Vanderbilt University School of Medicine in Tennessee for his medical training. Burry was often uncomfortable and antisocial because he had Asperger's syndrome. Even though he was an expert at segmenting the market, he had few friends and was not widely recognized in the financial community when he first began his career. As a conservative, Burry tries to separate his investments from the state of the market by putting little to no restrictions on them. Whether he invests in small cap, mid cap, tech, or non-tech stocks is immaterial. He seeks the good in each of them. He contends that investments in undervalued economic sectors yield the best returns. He believes that by claiming that there was a significant lot of uncertainty about the direction of the market at the time, he will be proven correct. He yet maintains that the market perception is not one of caution. He would prefer to remain secure in the knowledge that widely held predictions are less likely to come true than is generally believed, since irrational individual stock values will occasionally arise regardless of what the market does. One of the protagonists in Michael Lewis's book, The Big Short, Inside the Doomsday Machine was Dr. Michael Burry. The book details how he made the decision to wager against Wall Street and how he successfully forecast the collapse of the credit and housing bubbles in 2008. As a result, Michael Burry made a fortune. Michael Burry was portrayed by Christian Bale in Michael Lewis's 2015 film adaptation of the same name. Since Christian Bale wore Michael Burry's exact attire in the movie, it seems as though he precisely represented Burry's attitude as a socially uncomfortable yet undeniably smart investor. A big portion of the success of the book and movie may be attributed to Michael Burry. It's intriguing to learn about his character and how he predicted the housing crisis in 2008 and 2009. Although Michael Burry is best known for his investment in the 2008-2009 housing crisis, which is the topic of The Big Short run, Burry was actually a very skilled investor before that also. In fact, I believe that Dr. Michael Burry's massive short is just as compelling a narrative as the background of how he first began investing. Michael Burry has always identified himself as a value investor, even when the practice was not mainstream. However, Burry fared well in his own investments and developed a tiny online following on these early message boards thanks to the concept he discussed. Following the completion of his residency, Michael Burry made the decision to launch his own hedge fund. Burry is essentially a major value investor who adopts many of Warren Buffett's and Ben Graham's investment principles, such as maintaining a margin of safety, carrying out a bottom-up, basic analysis search for attractive stocks in disadvantaged sectors. Management of a portfolio is just as crucial as choosing stocks. He likes to search for assets whose volatility is great enough to cause a 50% bargain to fluctuate between 40 and 60 cents, and he tries to buy it for the least amount of money. "I do consider volatility to be a friend," he remarked. This works out nicely because as long as a dollar note continually sells for at least $1.10, most consumers treasure them. Volatility is on sale because 99% of institutions worldwide are working hard to avoid it on the false but Nobel Prize-winning assumption that risk and volatility are somehow related. For those of us who love it, volatility is the most misunderstood and underappreciated asset the markets have to offer. Burry contends that prior to investing any money, it's essential to comprehend a company's value. His major objective is to limit his risk in order to avoid experiencing a significant loss of capital. Burry's stock selection is therefore entirely grounded in the idea of margin of safety. Before making an investment, Michael Burry claims that if you concentrate on intrinsic value and invest with a margin of safety, you won't need to be concerned about any specific well-known catalyst, an occurrence that prompts investors to finally recognize the stock's true intrinsic value and causes the stock's price to pop. Burry asserts that simple, outrageous value is enough. Michael Burry claims that research is his weapon of choice as a stock picker. Burry doesn't care what the stock market is doing, and he's open to investing in any type of stock, whether it be large or small cap, mid or micro cap, tech related or not. It makes no difference. As long as Burry can see value in it, it qualifies for the portfolio. Burry claims that he has discovered that undervalued sectors of the economy offer excellent chances to purchase shares of best-in-class businesses at significant discounts. Michael Burry also makes investments in rare birds, as he puts it. The majority of these are asset plays, but there are also arbitrage opportunities and businesses that are selling for less than 2/3 of their net value or net working capital with fewer liabilities. These are known as Ben Graham's net stocks, or businesses that are trading below their liquidation value. Burry also incorporates, if they become available at attractive prices, the kinds of businesses that Warren Buffett favors, namely those with a long-term, steady, and strong return on investment capital. If Burry is able to comprehend them, this may include IT firms. Buffett-style investments are difficult to come by, like the other rare birds Burry invests in, thus Burry views them as longer-term investments. Dr. Michael Burry thinks stock selection and portfolio management are equally crucial. Investors who manage their portfolios well must provide answers to numerous crucial questions. Which amount of stocks is ideal to hold? When should I buy it? When to sell? Should one consider industry diversity and cyclical versus non-cyclical investments? How much should tax considerations factor into investing decisions? Is an objective of low turnover? According to Burry, the answers to these questions are largely a matter of talent and personality, therefore there is no need to offer justifications if one's choices depart from the accepted notion of what is appropriate. To quote Michael Burry, "When deciding where to buy, I incorporate some basic technical analysis into my method, a technique I learned when I worked as a commodities trader. Nothing special. However, I like to buy when the price is within 10% to 15% of a 52-week low that has been proven to provide some price support." That's the cynic in me speaking. Michael Burry cautions that fundamental research isn't always accurate. On occasion, the market doesn't reflect actual underlying value. Other investors may have access to more information than you do, and on occasion, you may err. Fundamental analysis is, however, at least one approach to increase your chances of success. Burry prefers to hold 12 to 18 stocks spread over a variety of gloomy industries. This lessens volatility while letting him concentrate on his greatest ideas. If they're made available at reasonable rates, businesses with a long-term and consistently high return on invested capital will have a durable competitive edge. If Burry is able to comprehend them, this might include IT firms. Burry considers these investments in the Buffett manner to be rare birds and thinks that when they're discovered, they should be held for extended periods of time. Investing is a form of scientific art, not science. The path of empiric discovery toward intriguing stock ideas will eventually lead to rewards and gains beyond monetary gain. I sincerely hope that some of you may connect with my writing and perhaps even profit from it. Within this, we conclude our video. We appreciate you helping us keep it going by watching. The best way to support our channel is to watch another episode. Thank you for tuning in. To ensure that you never miss an upload, please subscribe to the channel.